Hello everyone, we meet of course at a very sad time for my stock market update, so hopefully this will be some distraction from the sad news of the passing of Her Majesty Queen Elizabeth. If I may take a moment just to say I did have the privilege of meeting her, and something Theresa May, the former Prime Minister, said in Parliament today was when asked who is the most impressive world leader they ever met, either head of government or head of state. And she said to her it was always Queen Elizabeth. And I think I'd agree with that. In fact, I know I would. It's extraordinary that the individuals this country produces throughout history. So, let's go to more mundane matters, less important matters, but matters we have to deal with nevertheless, and the markets. So these are the valuations based on price earnings of the major sectors and the big S&P 500 companies, and you can see banks, green, energy, green, suggest relative undervaluation. Where does that take us? Well, if we were to look at performance, despite worries about the Fed raising interest rates and all those other things we're worried about, we see a lot of greens, a heck of a lot of greens, in fact. And so the market seems to, in the short term at least, have ignored it. Will it continue doing so? Well, there aren't many sectors which, based on this other measure of valuation, price earnings growth, there aren't many sectors which, again, show lack of valuation or undervaluation. One of those seems to be, again, energy. Why? Well, you'll know why. They're making money hand over fist. So let's move forward and then look at what the S&P 500 looks like. Now, I've drawn this week in, week out. You can see where we are at the moment. I will just draw that for you so you can see this is where we are, of course, at the moment. Should we continue dropping there and then moving up there? Doesn't really give us much of a gain, but that's the most likely scenario. There is a more pessimistic one, which is we drop through that and we continue lower, and that'll really depend on these monthly MACDs. These are mixed, could be positive, could be bearish. Okay, that's where we are on that, so wait another week and see what happens. Apple, big massive bellwether. You can see we're over here. Worst case scenario, we end up down there. Moderate case, in about a year, we're up 17%. Best case, this channel that I've drawn, it goes and at some point ends up there. Of course, it won't go in a straight line. It'll probably go like this, and maybe like that. Maybe. Okay, so those are three options. I think number 2 is the most likely. Okay, Microsoft, where are we? Well, we're over here. And if we continue on this upward trend that I've drawn, then where do we end up? Well, we end up with a 31% return in a year. Of course, if we fall below that upward trend, that channel that has been in place for a number of years, then all bets are off, and that's a different kettle of fish. Probably look to buy more Microsoft if it does drop below that. Okay, so that's where we are. Amazon, similar kind of analysis and story, of course. Where are we? We're here. And we might end up in a year with a 30% rise. That's what would happen if we got to the average case, or we might be down 8% if this continues lower, goes to this lower channel. And it's been on that channel before. Don't think it can't happen. It was down 44% from peak to trough. That channel's been drawn based on, you can't see it on here, but based on how the price has been moving for a number of years. Okay, so you can see why. And I don't think it'll go to that top end. I think it'll probably end up somewhere between 2 and 3. That's where we are on that one. Meta, well, you can look at this yourselves. I'm not going to go through all of them. That's where it is. It's near the bottom of that. Could do that. I'm not saying it necessarily will. Worst case will be that. Best case will be that. Medium case will be that. Which is it, Alpesh? Well, you can see what the worst case is. And if the worst case is acceptable, then everything else is icing on the cake. Okay, Costco. It's one that I've liked in the past. Worst case, it does that. Worst case is you're only up 10% in a year. That's the worst case. Best case is ends up going towards the top of a channel and you make significantly more. So if the worst case is okay for you, you find the trade acceptable. Okay, PayPal, I'll let you look at that. You can pause the video at any point and have a look at these in more detail in the analysis that we've done. Westlake, similar kind of story. Okay, I've drawn these not because they're ones I recommend, but it's just to say, just to give you an overview of what's happening in the markets at the moment. This is a common semiconductor one, obviously Qualcomm may well bounce back up. Right, Johnson & Johnson, it's in the news a lot. I can probably draw that line a lot better, and I might well revert back to that. And therefore, you can see from here, it's at the bottom of that, and hopefully we'll go up there, and I'll do a projection and update that chart. Katera, you can see what I've said, 20% up from, well, now it'll be more, because when I drew that, it was 20% from there. Now it'll probably be closer to 30%. Okay, Halliburton, you can draw it yourself. Marathon Oil, similar kind of story. Okay, if it stays on that line, what we'd expect. Occidental Petroleum, you know when I got in, which was around here, and we said the worst case would be 30% drop. In actual fact, it's on this upward trend, which is what we said, which would give us a 37% return in a year, which is the one we said Warren Buffett's looking for as well, because he got into it. By the way, these buys and holds are B's and H's there. Okay, Mosaic, similar kind of story. And what else we've got? Devon Energy, similar kind of story. You know, it's on the approved filtered list, and it shows clarity of direction for us. It makes it a little bit easier when I draw these charts for you, which is extra things I've started doing. Marathon Petroleum as well. Don't forget my campaign for $1million.com. But before you do go to that, that's sterling against US dollar. That's my projection. It's where we are. And you're going to start hearing more hedge fund managers talking about how they're buying into sterling and expect it within a year to go out, give them that 20% return, which once it's leveraged, it could be 40%. It could be 200% easily, depending on the amount of leverage they're using in foreign exchange, because they feel the downside is now somewhat limited. The problem is too much leverage and a little bit of downside, and you get a margin call and you're blown out of water. That's how hedge funds go bust. Exxon Mobil Corporation, look at this. Over a 20 trading day period, minus 19%. Likely 50 days, minus 19. After 100 days, you might still be down 11% and give up. But over 250 trading days, more likely to be positive. Not guaranteed by any means. No guarantees. The history is not a guarantee of the future. Okay, this is where people get confused. They say history is no guide to the future. That's rubbish. History is no guarantee of the future is the correct phraseology. Got it? Okay, so that's where Exxon Mobil lies, and it happens to be one of the ones that we've previously mentioned. Now, I don't know where to put my fat face to be out of the way for everybody. Here, let me make it smaller and put it out. There you go. How good is that? Bill Ackman, these are the billionaires, and these are the percentages of the stocks in their portfolios. There's Mr. Gates and so on. There's Mr. Warren Buffett. He has 40% in Apple and so on and so forth. Doesn't mean I buy it just because he's got it. But it's interesting for people to see. These are all billionaires and what's in their portfolios. For those of you on pipspredator, my trading indicator, these are the things we've been looking at. Euro, US dollar have had some really nice smooth trends for us. It's been easier for the indicator to pick up those trends and make money for us. So just keep an eye on the Telegram channel for that. Stock market losses, 928.21. Percentage of years where you've had 5% or worse, virtually all of them. 40% or worse, hardly any of them. Pause the video if you wish to have a look at that. The market and the individual. Cumulative returns over 30 years. That's the market. That's the individual. Why is the individual so rubbish? Well, our job is not just to get to the market, but to get above it. We know the rewards are so great. We don't want to be a crappy little individual like so many are. Equally, we don't just want to be following Mr. Market. We want to be a little bit above that. Okay? So I thought this was interesting. Also, somewhat interesting for you, FTSE All-Share Index performance post-arrival of new PM midway through parliamentary session. Again, have a look at it yourself, just more for fun than anything else, and the kinds of returns. Feel free, as I said, to pause this video and have a look at that. Put another way, these are the various returns, both total and if you were to annualize it, those are the returns that these prime ministers, well, it's not that they generated, but generated during their term in office. New Zealand dollar, US dollar has also been good for pipspredator. Keep an eye on that. US dollar, Japanese yen has been ridiculous. Congratulations to those of you who've made a bit of a killing on that one because it's just been a one-way bet. Did we know it was going to be? No, of course we didn't. That's why we have an indicator to take the emotion out of it for us and tell us when to get in, where to put the stop loss, where to add to that winning position as buy, stop loss, where to take profit if we're being risk averse, and so on and so forth. Which sectors perform well 6 to 18 months after earnings per share peak? So assume profits per share has now peaked. Sector performs 6 to 18 months post that growth peak. Well, healthcare, staples, and energy. Healthcare is somewhat overlooked, so that's the Johnson & Johnson types. Okay, so just out of interest, just showing you that, no action needed. This is Morgan Stanley's views. There, you can read them yourself. You might want to pause it. I found this interesting on the Wall Street Journal. Investors are pouring into US stocks to avoid greater turbulence overseas. Okay, that's my view when I'm at the BBC. Just thought I'd show that out of interest. Me talking into a camera with that backdrop if I'm not in the studio. And if I'm in the studio, here's an old one from when I didn't have 15 chins and I had a bit more hair. Naga and Sally. He's the only one who's in there. There's about 5 cameras. He's the only one, the floor manager, who'll lay out the papers. So I'm there busy reading the papers. The girls are talking about how they're going to crucify me in the debate that we're about to have over the papers. I just thought I'd show that. It just came up on my feed and the like. So I thought it was a nice little picture over there. And there you go, little insight. Back to matters of state. As I said, I hope you're all keeping your spirits up. And again, I think somebody else put it incredibly well. And I can't remember who it was. Might have been Keir Starmer, the leader of the opposition. And he said she was the best of us. And yeah, I think that pretty much sums it up. Good wishes to you all.